Trading since 2016, teaching since 2021, and dropping bars since 2023. What's good? It's your boy Big Bain in this thing, and y'all see where we at. BBIDF, right? My channel is dedicated to, your everyday hard working man and woman, right? You know what I'm saying? Who really going through it, and they just sick and tired of being sick and tired. You know what I mean? They're looking for that way out, and they heard about Forex, but they don't really think it was for them. They don't think they could figure it out. They don't think they could ever, really make any money with it because they think it's too difficult. Well, I take all that complex stuff and I break it down into layman's terms to where you can understand and get to the bag. You know what I'm saying? Have yourself a little avenue and a way out. You know what I'm saying? So if that's you, and I know it is, go ahead and hit the like and subscribe button, and I'm gonna catch you on the inside. All right, it's your boy. Peace. All right, cool. There we go. So, Wayne, I'll start with you, bro. Just right out the gate. So you want to know what's the difference between support and resistance and supply and demand? I love that question because it is a simple one, but one that everybody is confused about. So, thank you for asking that, and let's review it right now. All right, support, resistance. All right, and then you have supply. Let me just put it a little, do it like this. You got supply, and then let's double it up. Right here, you have demand. All right, the key difference, okay, really is none. I know that's going to throw things off a bit, but trying to explain the difference between the two. But what I'm getting at is that ultimately they're the same thing. All right, Wayne. So understand resistance and supply are almost synonymous, if you will, meaning they're roughly concerning the same thing. Supply and or support and demand again is also synonymous in a sense, and it's roughly um, you know talking about the same thing. Okay, so now that I've said how similar they are, like what's the real difference between the two? Supply, okay, is usually detected, or you can spot a supply zone by when you see major V shapes. All right, so check this out. So we come up here and then we come down like this. All right, so when this happens, you create this major swing point right here. And let me highlight it. Because again, I understand you may not be able to see it. All right, boom, bam. There it is. All right, and I'll dim this a little bit. All right, there it is. But okay, right there. So you create that swing point, okay? And when that happens, come on now, let me move around. All right, there we go. So you create that swing point, and when that happens, this is basically a bunch of bull candles that came up to this area, and then a bunch of bear candles eventually started coming in to the point where it pushed it all the way down here, creating that V shape, right? That upside down V shape. All right. And we call these swing points, right? Because price switches from one direction to the next direction, causing, in a swing manner, right? Just swinging around. And we call these swing highs, swing lows, what have you. But once this is created, right, there is a bull candle that sits here, right? It was the last bull candle, right? Wherever it may be, wherever it might lie, and I'll show you that with real candles. But there was a last bull candle there that, there was a bull candle that was the last bull candle before price started shooting down. So basically, with that area of where that candle is, we mark that with a zone, typically with a zone. So it'll most likely look like this, where we're just trying to capture the main part of that swing, right? And now we're calling this a supply area instead of a resistance area, even though they're both the same. But what is separating them is that you have a major turning point. Okay. So here it is. And you're like, okay, well, I see turning points all the time. So you're telling me every turning point I'm looking at is a supply zone? Technically, yes. But you'll see it, you'll understand it better when you see like a little something like this, right? That is a little swing, right? We went up for a little bit and then we curled down. But you can clearly see it's no type of swing like this, right? It's not this kind of swing. So, yes, as this may be a supply zone, all right, this is not really one that we're going to label as the supply zone, right? And not because it's not, and again, I know this is a bit confusing, not because it's not technically a supply zone, it's just because the swing isn't major enough to show you that there was a lot of supply here. That's the only difference. That's the only reason why, right? We can still say it, but there was just such a little bit of supply that set right there. So by the time price comes back to this, because there was just such a little bit of supply, it may not be enough to maintain price falling down, right? It was just a little bit. So if there's more bullish pressure, we'll break through, right? This is why we're trying to separate, right, the terms to get you to understand that a supply area is more, it's an area where you more likely have the probability of more selling pressure coming in when it gets to that area, okay? Versus a resistance level, we could have this. We could just have a little bit of consolidation like this, where price was doing like this. Boom, bam, boom, bam, boom, bam, boom, bam, boom. We got a great example of this exactly right here on gold, right? Look at that. That is consolidation. At the very top is the resistance area. Now, what have you noticed? Price hasn't made our V shape. We haven't gotten a swing yet. Do you understand what I'm saying? We just went up and now we're going sideways. So now in a situation like this, we can see that clearly the top of that consolidation is resistance because prices failed to go above it. And it's showing you that just by what the candles are doing, the price action, the action of the candles of or price. You can see up, down, up, down, up, down, up, down, right? All the candles stand in the same, generally the same area and giving you the sideways movement to where you can identify, okay, where it's having a hard time breaking above here, that's resistance. And it's having a hard time breaking below here. That's support. So when you're thinking of just support and resistance, there are areas that price is kind of sitting at. Do you understand what I'm saying to you? And resistance is an area where price is kind of sitting at and it's giving you a level, right? This is so that when you're marking up the chart, you can have something that you're saying, okay, that's the ceiling, that's the floor. So with like in a situation like this with gold, I'm waiting for it to break out of the floor or break out of the ceiling. Therefore, I can make a decision on the trade, on which direction I want to go in the trade, because I understand that's resistance, that's support. It broke above it or it broke below it, and now I can kind of get jiggy with it. Versus supply, right? Supply is showing you that price took a major move up and then it turned around. So if price was to get back here, right, at some point, well, we can kind of expect a heavy move down versus with it being consolidated like this, we don't know how far it's really going to go down because we haven't really seen the bearish pressure, right? We haven't seen the selling pressure yet. All we seen was bullish pressure. We're going up, 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 and we still went up. We just went sideways now. So you didn't really get to see that swing come down where if price gets back up. So it does like this. It drops, creates that swing. So now when price is coming back up to this area, the last time it was here, it made a major drop. So now you're looking at this as your supply zone to supply you with bearish pressure to the downside. So is that making any sense whatsoever so far, Wayne? Let me know.
Yeah, that made perfect sense. When you was
Perfect.
explaining it, I was like, I wanted to ask, but then you explained it when you said, well, basically, how it's consolidating right now. I was gonna ask. So does that mean even though it's consolidating, there's still a supply and demand zone there in that little space? But then you was like, no, it's such a small move. That's really not
Exactly.
doing too much. It's just sideways.
Exactly. Exactly. So you get me now. I've explained majority of resistance and supply, but would you be able to understand it for support and demand? Are you, can you flip it and, figure it out? Or do you want me to review that as well?
Oh, now I understand it now.
Okay.
Thanks.
No, no worries. No worries. Yeah. And again, guys, this is all it really takes a lot of times, right? Just to get that little bit of aha. And now when you're marking up things and you're seeing certain things, it just comes, it's going to come back to him. Wayne's going to see something on the chart. He's going to say, man, I think this is support, right? He's going to say, I think this is support. But then he's going to realize that price has been going, price has been going down, right? It's just been going down like this, but it hasn't really made a reversal move like this. So he doesn't really know that that's demand, right? He doesn't really know it yet, right? To be able to come back and look for the opportunity to buy from here. He doesn't know it. He just knows that, maybe it's done like this. Maybe it's done like this, right? Just a little bit of a something, not a major swing, but just enough to create the initial V shape. So he'll mark that as the man. He'll say that to himself, right? But then he'll also remember, man, when I'm just trying to think about support, what is that like versus the man? And he'll remember that it's the swings that separate the two, right? Even though they're synonymous, it's just that swing point that makes one demand versus just a support area. So here, right, he's going to say, oh, I think this is demand because he sees the V shape, but then he's going to start seeing price do one of these numbers. And he's going to know, oh man, that is just a support area. So now here it is, and I didn't do this on purpose, but I just drew out one of the chart patterns that you'll get from time to time, which is a bearish flag. Okay, so there's the pole right here. You get a bit of consolidation, and then you get a breakout like this to the downside, right? And that whole pattern, this pole, this flag, and then the breakout is that bearish flag pattern. But when he sees this, that price is just tapping, 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 tapping. He's going to put that line there to represent his level of support. This is an area where price is just holding up. Okay. So again, you got to remember support is going to hold you up off the floor. So what you should be thinking to yourself is that if it's having a hard time breaking below this support level, it most likely wants to reverse, right? It most likely wants to go up, or at least it's not gonna get any lower than that, because that's what support is telling you, that price is holding above this price point, this level, right? So now you get to thinking, okay, maybe price wants to go up. All you really need to see to know that it's going to go up is when it breaks above the resistance level that you drew, not the supply zone, right? Because the supply zone is way up here. But your resistance level that you have here, you're just waiting for that breakout. You get it, and you're like, okay, well, now y'all must want to go up because you were failing to go lower, and then you got higher than the area that's supposed to keep you below. Guys, I'm trying to tell you, this is taking candy from a baby when you put it together. All right. Support and resistance are your levels where you can see price kind of hanging around, just chilling, talking to each other, playing the game, right? Doing whatever, right? That's what it is. So, like, right when I look right here on gold, all right, I can see that this is probably the most major swing I had right here. Is coming down and then coming up, right? That's the most major swing, like a huge swing. But then I also see a little swing down and up. All right. So you can see the difference, right? You got this one and then versus this one. Doesn't this swing point look more huge of a swing than just this little swing right here? So, you'll see that, right? And again, you can say, this is a supply or demand zone. I'm sorry. You can say that's a demand zone, which again, it is, but the swing of it didn't make it such a major demand, right? Even though it went up, but this was where it started. This was the real swing coming around. All right. This right here, when I take all of this off, right, and I just put a little line right right about there, right? And I make that my little support. What do you guys can see? Right? I can stretch this out probably way further back, but I'm gonna just put it like this. All right. Let me see if it touches. All right, I'll bring it all the way. Kaboom. Right? Now coming back to it, you see what was going on. Exactly what I told you. Price hits here, right? Hits it again, goes a little bit below, give us a false break, right? Didn't really want to fall, right? Comes up again, respects it again. So now you're having this level of support that you're starting to see prices failing to get below it. And then initially eventually what happens? Price starts rising up, rising up, rising up, rising up. Guys, I'm telling you. All right. Versus this, right? So you're like, okay, got that. I got support. But what about that demand? All right. Well, here it is. Okay. So, like I said, you had a whole bunch of, let me get it right. All right. You had a whole bunch of bear candles coming down. Boom, bam. Right. There they go. And they coming down. Right. Then what happens? You got a bull candle. That was the last bull candle. This is it right here. This little doji. All right. So right there. Okay. That candle. Right. Draw this out. Stretch this out. Now take a look at this. Here's your demand zone where you're expecting a lot of bullish pressure. So you don't know that price is getting ready to reverse because it was going down, but then it starts to reverse and it gives you your V shape, right? Gives you your V shape. So now you just count that last bull candle before price started moving up, and that's your zone. Now, tell me something, um, Wayne. How ironic, right? That after I drew out that area where we had the V shape, where we had the turning point, where we had the swing point, that price eventually comes right back to that area, bro, to the T twice. One wick here, and then another wick here, right? And then does what? Completely takes off. Bro, this is a from 1903, so pretty much 1900, all the way up to where we are right now, sitting at 1961. About a 58, 60, $60 move on gold. That is over 600 pips on gold. That's six bands on a standard lot, easy. And it took 6 days. Oh my God. 60 pips, $60 move, 6 days, six bands. It's crazy, crazy, guys. But it was all in just knowing the difference between demand and supply, resistance, or demand and support and resistance and supply, right? Guys, I'm trying to tell y'all, if y'all want to make a killing, man, just incorporate what you're learning today. Just incorporate it. This is recorded. Request the recording, download it, replay it, take out your notes, write them down. Okay, that's the difference between this. That's the difference between that. Okay, boom, bam, boom. All right, let me go mark up a chart. I'm gonna just pull up a pair. All right, all right. I see. Okay, oh, there's that big swing. I see it made that big swing right there. All right, so that'll be my supply zone. Okay, boom, boom, boom. Okay, I see, I see. All right, let me see something else. Okay, look, I see these candles. They bunching up right here. You know what? I'm gonna just put a line right here to represent my resistance, and then I'm gonna put one to represent my support. Go into replay mode. After you marked it up, pick a point and let it play out and see what happens to your markings, to your markups. I promise you guys, it'll blow your mind. It'll blow your mind. But yeah, man, Wayne, I know you said you got it, but again, is that making any more sense? And did you have any other questions about it?
I like the way you broke it down. How many times it bounced off and just took flight. You did a good job of that. Thank you.
You're welcome, man. Absolutely welcome. Want to get money? Want to get paid? That's Forex. Like a sensei, then you know you got to come and swing my way. And if you want to fast forward, hit replay.